And as major economies in sub-Saharan Africa continue to release their inflation data, recent trends point to a stabilization in South Africa, Ghana, and Ethiopia. But there's been an increase in Kenya and Nigeria. What is responsible for these, and what is the general outlook for major economies in the region this year? Matt Kindiga, an associate practice lead for sub-Saharan Africa at Frontier View, joins us now to provide answers to these and more. Hello, Matt. Thank you for joining us.
Hello, thank you for having me on the program today.
Yeah, so in recent months, we have seen rising inflation in Nigeria, Kenya, but an easing of inflationary pressure in Ghana and South Africa. What has driven these trends?
Yes, so we have seen certainly higher inflation in Nigeria, and this has mainly been driven by weakness in the naira. We've also seen underwhelming agriculture output, and that has driven up food prices. We've also had lingering supply chain disruptions from COVID and border costs as well, border disruption, which has raised costs for importers. But in South Africa's case and Ghana's case, broadly, it's a result of, or lower inflation as a result of improved currency stability in recent months. And specifically in South Africa's case, we've also had a very underwhelming set of aggregate demand data coming through, which really suggests that demand has kept prices relatively weak. But also in Ghana's case, we've actually seen a longer-term trend in terms of lower inflation rates over the last couple of years. And as COVID-related trade disruptions wane, we expect this trend of lower inflation to continue in Ghana.
All right, looking ahead, what are your inflation expectations for sub-Saharan Africa for 2021?
So very broadly, we do expect inflation to continue to decline across the continent. So we don't expect inflation to rise to the levels that we saw in 2020. And this is mainly because of a reduction in COVID-related disruptions. And we are broadly expecting more currency stability, which will mean less upward pressure on prices. A very good example is in West African Francophone markets. More currency stability of the franc means we could actually see very low inflation. And in countries where inflation is rising, such as South Africa and Kenya, it's unlikely to rise significantly. I would say Nigeria is an exception. We are expecting higher inflation this year than in 2020, mainly because of higher fuel prices and downward pressure on the CD. And inflation will remain high in Angola and Ethiopia. Double digits is likely.
Well, how will inflation trends influence monetary policy responses by central banks across the continent this year, and how will businesses be affected?
Well, generally, we don't see a significant movement in terms of interest rates this year. We don't expect a major sort of increase or reduction in interest rates across sub-Saharan Africa. We may see some reduction in interest rates where inflation is falling significantly. For example, in Ghana, we do expect 1 or 2 interest rate cuts this year. But in South Africa and Kenya, interest rates are close to record lows, and we are seeing an increase in inflation. So central banks have probably very little scope to cut rates. And in markets like Ethiopia and Angola, inflation remains very high, and there's considerable downward pressure on currencies. So there's very little scope for interest rate cuts. In terms of how businesses will be affected, so lower inflation is broadly positive for customer spending power. So we could see sort of improvements in customer spending as a result. But borrowing costs are likely to remain high in sub-Saharan Africa. And interest rates, because interest rates aren't likely to fall significantly, access to affordable credit is not likely to improve dramatically over the course of 2021. So high borrowing costs are to be expected.
Okay, so thank you so much for the update, Matt Kindiga, Associate Practice Lead, SSA Frontier View. Thank you so much for your time.